Hey everyone, welcome to another episode of Bitcoin Law Review with your host Tone Vase. No hat today, so I'm gonna be like, there'll be a hat exception on the days after I get a haircut. So it looks like I actually, everything is clean. That won't last very long, but that's what we're working with now. We're gonna jump right into the show. We got some really great guests for you guys. I'm just gonna go around the room and do quick intros. Bill, why don't you start us off?
Hey, good morning. Bill Restis, Restis Law Firm. I've been in the securities class action space for more than a decade, and I work now in the intersection of blockchain and securities law. I'm a little under the weather today, guys. I've had some food poisoning, so don't expect my best commentary today, but I'll chime in when I can.
Sorry about that, guys. All right, Manny, keep us going.
Hey everybody, I'm Manny Alejandro. I'm in private practice in New York, focusing on capital markets and securities my whole career, working in the blockchain space now and many interesting projects, and real excited to be part of this show and looking forward to an exciting show today. Thanks for having me, Tone.
Yeah, this one should be a good one. As you guys can see, there's Bruce Fenton in there, but let's go through our lawyers first. Sasha, what's new with you?
Thanks, Tone. Sasha Hodder here. Work as an attorney with DLT Law Group in Tampa, and we focus on anything blockchain related, really. Projects looking to get started, some of the business formation, that kind of stuff, and also getting into a little bit of litigation now as things progress in this wild crypto market. Really excited to be on this show and excited to hear Bruce and Jason continue the discussion from last week. Thanks.
Yeah, no, that would be cool. Your mic sounds a little bit too loud to me. I'm not sure how it is on other people's ends. So if you can adjust that, that'd be great. Jason.
Hi, everybody. Jason Seibert, lawyer. That's about it.
All right. And it's rare on this show, but we are going to try to bring you all kinds of perspectives for a non-lawyer besides myself to be on here spewing his opinions. Welcome, Bruce Fenton.
Hi, I'm Bruce Fenton. I'm a registered investment advisor. Been focused on, I've sold securities for 27 years in some sort of form, either advised, as a broker or a registered investment advisor. And I've been active in the Bitcoin space for about 6 years, and I run a company that's focused on, this sort of intersection of tokens and securities.
Great. Hey, I know what I just said right before you spoke, Bruce, might have came off like offensive. It was more of a joke. Like, I try to keep it to like one non-lawyer thinking that he knows what he's talking about to the show. But occasionally, I guess we will be bringing on actual non-lawyers. So please don't take offense to that. All right. So I want to pick up the discussion where we left off last week, where we started talking about RavenCoin from the perspective of a letter that was written by a lawyer in order to assist to get RavenCoin listed on Bittrex, which is a very popular altcoin exchange. And from there, lots of people thought that we were misunderstanding RavenCoin. And you yourself, Bruce, wanted to jump on the show. Pepe, the lawyer, wanted to jump on the show, which we were able to get him on. We're not able to get you on. You and Jason Seibert followed up with a very long video going into some of the details. And that video should be linked in my video description. If it's not, then I will definitely add it. I'm just going to go over to screen share right now and just to point people over to Jason Seibert's YouTube channel, where you will be able to find this video. It was 3 hours and 40 minutes long. I saw all of it. I didn't catch the beginning of it, ignored this first 3 minutes. I watched the last hour and a half live, and then I went back and watched the entire 2 hours of it yesterday just to get better ready for the show. So without further ado, I want to kind of state the case as to why I would not do what Bruce is doing with RavenCoin. And one of the reasons why I wouldn't do it is because I would be scared that I would be in violation of security laws. And after listening to Jason and other lawyers on this program and speaking to all the lawyers I know in the space, I am very, very cautious of what I do and what I say and what projects I affiliate with, not to be in the crosshairs of the regulators. So, so Bruce, so here's the white paper of RavenCoin. Your name is on top and Tron Black is right below you. Now, my question is Tron Black an anonymous person, a pseudo-anonymous, or is this someone I can find on, find their face, find their name, find out where they're from? Or is this just like a Satoshi Nakamoto?
No, he is actually a real guy. He has an unusual name that sounds like a fake name, but that's his real name. He's a real person. He's a principal software developer at Medici, and he has, I don't know, 20 plus years of experience, as a software developer. He's been a CEO and everything. So yeah, he is a real person, and his real name really is Tron Black.
Okay, good. I'm sorry. Can you remind us what Medici is? It sounds very familiar.
Medici is a subsidiary of Overstock, which I'm on the board of, and has been a major supporter of this project. Medici allows employees to work on any open source project they choose, and many of them work on this, including Tron, who's sort of one of the main developers on this project, and co-author of this. There's another white paper that came out before this that I wasn't on, but Tron wrote that one also with another fellow named Joel Waite.
All right. Any other backgrounds? I just want to close my windows because it's kind of loud with the wind. Okay, so there we go.
That was theatrical.
Sorry about that. Should be a lot quieter from my side now. It's not making go about that. Okay, so I wish I had time to read through the entire white paper, but just time is so short. I did not. But we're not actually critiquing RavenCoin here. So that's the first thing we want to try to explain. So like Jason said, RavenCoin is probably one of the more honestly launched projects we have in the space. It followed the model of Litecoin. You fork the Bitcoin code, you make a couple of changes, you explain why it's different, and you inform as many people as you can about when the Genesis block is, those that will listen, and then anyone can mine the Genesis block. And you, as the creator, you did not insta-mine, you did not, mine in secret, and the whole thing remains 100% proof of work, correct?
Yes.
Okay, so we're not questioning. I mean, we can question the need for. I can debate whether RavenCoin should exist or whether it's a good project, but I don't have a problem with the way it was launched. I put this in my fairly launched coins bucket along with Monero, Litecoin, Maxcoin, Dogecoin, and maybe one or two more. But these are the ones that I know for sure had fair and honest launches. Okay, so. That's not what's a question. So now let me just go through some of the facts that I'm working with here. So your name, only the two of you are on the white paper. Your name happens to be first. Not that that really matters. So I would say you two are co-authors of the paper. You are more of the, the big picture guy, the general guy, and Tron is more of the developer writing the code.
Yeah, that's accurate.
Right. You promoted it for approximately 4 months before the Genesis block because you wanted the maximum number of people to participate in the network once it's launched.
Yes.
Okay, cool. Now, you tried to mine it in the very, very beginning, but it looks like you did such a good job promoting it that you were not very profitable mining it, and you might have mined, I don't know, I don't know what the coin diffusion rate is. I don't know how often the blocks are. I don't know how many coins get ejected per block, but I would say that maybe you were a competitive miner for about a week.
That's a very good estimate. Yeah, I bought these two CPU rigs, which I keep here as a souvenir. They cost about $5,000, and I thought that I would actually swamp the network. I had them. I figured nobody would be interested in this, and I'd have them for 3 months. They were obsolete within a week. I did mine about 1.2 million coins in that first week or so, and then they, as you know how mining goes, I think the 9th day it drops off fast, and once GPUs are out, it never ever returns, and that's pretty much what happened with this.
So that's what I was gonna say. I was gonna take a guess that you purchased 95% of your coins, and And you wanted to, and you pretty much purchased them, maybe not immediately because there weren't that many coins. So the opening price might have been a little bit high, but you purchased them as early as you can at the cheapest price that you could.
Well, there wasn't that, since it was, there wasn't that many coins out there. You know, the first day there was only 7.2 million coins. The second day there was 14 million coins. Now there's 1.6 billion coins. So there wasn't that many coins to buy. But once there, and I didn't buy much. I was mainly focused on mining for the first few weeks. But after that, once I realized, and I'm not into mining. I'm not good at hooking up the cables and stuff. I've never been a miner in this space. I've always hired other people to do the mining in the form of buying coins from that. And that goes for Bitcoin, Litecoin, whatever. So that's what I did.
No. Well, I just want to go. I just want to go to like the general background facts, right?
Sure. So that's correct, though. But I started mining, and just to answer your question, I bought about $5,000 a day, many days on a ongoing basis, you know, over the last several months, and that's
okay.
pretty.
And well, when did you stop buying?
Well, I still buy. I still buy.
Still buy.
I've been buying all along. Yeah.
Okay. But the rate of the amount that you're buying has probably slowed down.
There was the one biggest spike in my buying was like probably a month and a half ago, 2 months ago. You know, as I was doing more allocation, you know, now I have what I think is a pretty healthy allocation at 30 million coins. I don't really need to accumulate too many more. So yeah, and my cost basis on them is pretty much what they're trading at now. I mean, I'm not up or down much. I don't know exactly.
Right, no, we're not. We'll get to that. Okay, so I just want to go through. I have like a list of like 7 facts. I want to make sure that we're all on the same page.
Got them all right so far.
So other community members from the Raven community are helping to spread awareness of this coin and helping getting onto the exchanges like the Pepe letter.
Yeah.
Okay, got it. Now, as your discussion with Jason earlier, you don't have an interest in giving away these coins or locking them up forever the way we assume Satoshi has. You have no interest in donating these coins for like all of your coins for the project, and you are holding on to these coins interested in a future financial benefit.
Yes.
Okay. And this one is going to be interesting. So Bitrax reached out to the RavenCoin community asking for someone in charge.
Right.
And to which you guys replied to them that there is no one in charge. It's a decentralized project, right?
Yes.
Now, here is where my first problem comes in. So I'm going to lay out my case. So Bitrax has been around for a really long time. So they kind of know what they're doing, right? Would you agree? That's why you guys want to be traded on Bitrax.
Sure.
So if Bitrax could not, make their own decision that RavenCoin is a complete decentralized entity with no one in charge, what do you think the average person... How do you think the average person is, assuming that RavenCoin is no one in charge, right? So the way I look at it is, if an experienced crypto company assumes that this is a totally centralized coin, you may have a problem explaining to the regulators why you're not. You
Sure.
can see how it's a little bit of a problem, right?
Oh, I can see how you saying that. I don't think it's a problem at all. But sure, yeah. Somebody could argue it's centralized for sure.
Okay, so let me see where I want to start. So here's the reason why I would not, I wouldn't do what you did, because as Jason was trying to explain, and I'm gonna pull up. Maybe we can go through these points one by one. Actually, because I haven't even read them yet. Let me do another screen share, and this is from the this is that Heinemann letter from the SEC, right? And
Yes.
So here's point number 1. So let me read this part. What are some of the factors to consider in assuming whether a digital asset is offered as an investment contract and is thus a security? Primarily consider whether a third party, be it a person, entity, or a coordinated group of actors, drives the expectation of a return. Okay, I actually have not read this part till just now, but that doesn't sound good. That question will always depend on the particular facts and circumstances And this list is illustrative, not exhaustive. I'm sorry. I'm about to show my terrible English skills.
Not
I'm
exhaustive.
not familiar with that word. Okay. I'm going to read this again. Consider whether a third party, be it a person, entity, or a coordinated group of people. Now, I can see the argument how no person started RavenCoin by themselves. I can see you make the argument that no entity started RavenCoin by itself because there is no corporation, there is no company, though Jason did mention the concept of a de facto partnership, which the courts and the legal system can use when you don't actually file. Like, not registering as a company or not registering as a security doesn't actually get you around the laws that companies have to deal with and the laws that securities have to deal with, right? They can come down on you harder for, well, it smells like a security and it looks like a security. Why didn't you register as a security? But I'm actually having a struggle to see how the creation and promotion of RavenCoin was not a coordinated group of actors that drives the expectation of a return. And I want to talk about that for another minute. But let me read point number one, because I think point number one goes with that statement. Is there a person or a group that has sponsored or promoted the creation and sale, and I'm going to mention the and sale part, of the digital asset, the effort of whom play a significant role in the development and maintenance of the asset and its potential increase in value? So I know you are treating this sponsored or promoted, the creation and sale. So had this been or sale, we would not be debating this little part, right? So just because this website happens to say creation and sale, Jason was trying to explain to you on his podcast that this can easily be changed to an or the government will look at the case and they will say, well, we didn't mean like it's inclusive creation and sale. You did not sell RavenCoin, but what was done is the sponsorship and promotion of assigning hash power, which could be considered time and value and effort, almost like in it, as an equivalent to people buying RavenCoin. People donated a bunch of hash power, which is why you were not able to mine successfully after about a week, because people were.
Tone, this is Jason. I would question the word that you used there. I don't think anybody that mined donated their hash power. I don't think this was a donation. I think people point hash power at certain coins in order to
So
mine those coins, right?
You're right. I did not.
The word donate is a bad word there.
Yeah, I didn't mean. I didn't mean the word donate. Pointed their hash power is a better use of the term. People pointed their hash power specifically at this coin in the beginning, in order to profit from the asset's increase in value in the future. Now, I understand that RavenCoin has a utility that you explained in the white paper to build assets similar to Counterparty, but that utility is not yet functional, and that is a future utility. And it's very difficult to make the argument that the number one reason that people are mining and acquiring RavenCoin is for the sole purpose of that utility and not the appreciation of the RavenCoin itself. Okay, so these, so this is one of my issues with it. Let's go to number two. Has this person or group retained a stake or other interest in the digital assets such that would be motivated to expand efforts to cause the increase in value of digital assets? So it actually expands on that. Would purchasers reasonably believe such an effort will be undertaken and may result in a return to their investment in a digital asset? So here's how I read this part, right? you were gonna mine from the second it came out. And when you realized within the first week that you were not gonna be able to compete in mining, you set out and bought more of these coins, because as an insider, as a person that created RavenCoin, the concept of RavenCoin, promoted it, been working on it for 4 months for the Genesis block, you have, you believe in it, and you are basically, again, it's not a real company, but you are, you stand to benefit not the most. There could be somebody with more RavenCoin than you, right? There might be people with more than 30 million RavenCoin, right? But do you know if there's anyone with more Bitcoin than you, with more RavenCoin?
Yes, there's a couple holders. I know a miner who has a huge amount. I think there's a trader who has a huge amount. Overstock owns, I think, 65 million or something.
Okay,
like
so
that.
let's say you're in a, let's say you're,
Overstock, I believe, is the largest holder.
let's say you're in the top 10. Is that fair?
Yeah, it's very likely.
Let's back up for a second, Tony.
Yeah.
Bruce just said that he thought that Overstock was the largest holder of RavenCoin, right? And RavenCoin was developed by both Bruce and Medici, who are both employed in some form of a faction or affiliated in some form of fashion by Patrick Byrne through either T0 or through Medici. This platform, RavenCoin, creates digital assets that are intended to be securities. T0 is a securities launch platform. Am I the only person that can connect all the dots why RavenCoin exists to begin with? And why
pretty open
it's
about
there?
It doesn't really take any dot connecting. We've been pretty open and transparent about it. Tron has worked as an advisor to T0. I'm on the board of T0. I'm on the board of Medici. Medici is by far the largest investor in this. Medici and Overstock are the largest holders in it. Patrick Byrne, the CEO of Overstock, who is also on the board of T0, and Medici is a vocal supporter of it and owner of it. So it's certainly not secret. We're very open and transparent about it.
Right. So T0 stands to make profits based on exchange fees for assets that RavenCoin produces, right? The answer is yes.
Well, T0 will make money on anybody who trades any assets.
Right, and
so
T0
they have an interest
needs
in any of these protocols working.
And T0 needs a platform for assets to be created with, right? And so what better way to launch that asset platform than to have its own in-house people, its own in-house coders, and its own in-house promoters go off and make RavenCoin so that T0 can have assets on its.
Well, all that's correct. I would just change the company name to Medici. T0 is separate. T0 didn't have anything to do with this development early on.
Oh, that's right, because everybody knows that
Medici,
T0 has nothing to do with Patrick Byrne or with.
No, they have a lot to do with them. But there is a separation, and
no, you're right. It's on paper, so there's no way that anybody has ever looked. Paper.
Well, certainly T0 people are motivated and working on this. If you want to make an argument that T0 people, I mean, I just said that Tron has worked for T0. Certainly T0 is supporting this. So are other exchanges. I think that there's, other exchanges and companies and others who are supporting this as well. There's nothing secret about that.
All right,
but you still think there's no way that a regulator or a court of law could come up with a de facto partnership or de facto organization that's in charge of running all of this and promoting this. You don't see a connection between.
Sure, they could say that there's a de facto organization.
T0, Medici,
yes,
and Overstock, right? Bill, you've dealt with de facto partnerships and organizations before, right? Bill, Manny.
I'm listening right now. I have some comments, but I'm saving them up.
Let me. I want to go through all 6 of these points.
I can already just dispense that we agree with those. Of course we have. Right. You could argue that there's central control. I mean, if you're going to go through and bullet point why we apply to each of those, yes, we do apply to those. Yes, there's a person or group who has sponsored and promoted the creation and sale of the digital asset. Yes, there's a person or group who retains a stake. I would agree with all of these things if that is the argument you're making.
Right. So I was going to go through all of these. I actually haven't even read 4, 5, and 6, but I
don't think we need to go through all of them.
Okay. So I can make the argument that it applies to all of them. Right. So the only other thing that I was going to add besides go through this list and point to how your involvement with the creation of RavenCoin applies to each of these points. The other thing I was going to talk about is the difference between RavenCoin and Litecoin, because I know you pointed to that a lot in Jason's debate, saying, hey, if RavenCoin is a security and Litecoin is a security, and if you can make the case that Litecoin is a security, you can almost make the case that Bitcoin is a security. But we know Bitcoin is not a security thanks to Jason and the 2014 case of Trend on Shavers. So here's how you're very different than Litecoin. When Charlie Lee was doing everything that you are doing, well, it was to promote the creation of Litecoin, nobody knew Charlie Lee existed. So while Charlie Lee was still promoting Litecoin and its launch, Charlie Lee did not have any followers. Nobody knew who Charlie Lee was. He was just another developer. He had no fame to promote the creation of Litecoin. Another reason why Litecoin is very different than RavenCoin is Litecoin was launched in 2011. When Bitcoin came on the scene, Bitcoin was the science experiment of a blockchain. That's why it was valueless from the start. When Litecoin came on the scene, Litecoin wasn't the first fork of Bitcoin, but it was the first popular fork of Bitcoin that people kind of knew. So at that time, creating a fork of Bitcoin and introducing it as silver to Bitcoin's gold was itself a science experiment to see if a fork of Bitcoin is actually gonna sustain itself long-term. It's a very different environment today. Here in 2018, it is absolutely assumed that a fork of Bitcoin with a notable prominent person promoting it the days leading into the fork will have an expectation of value. And that is one of the reasons why you have a lot of RavenCoin, and that is the reason why so much hash power went into RavenCoin, and it's popular today, and we are even talking about it on this show. If someone as prominent as you were not involved in RavenCoin, it would never make my YouTube channel. It would not be discussing it. So that is another huge factor that does play a role. The fact that you are a prominent person, just like Roger Ver is a prominent person when he forked off Bcash, and Bcash might not have been where it is today if it wasn't for that the stature and reputation that he had. So that, I believe, is a very, very big difference that separates today's forks. We also have a much clearer regulatory statements like the one I'm screen sharing right now, where Charlie Lee might get away with saying, well, it was 2011. We have heard nothing from regulators. There were no lawyers to consult with that could have given us the opposite view, like a Jason Seibert, for example. But now it's hard to make that argument because there are lawyers. Like this program explains why doing RavenCoin today has a huge regulatory risk than what Charlie had with Litecoin. So that's another argument I wanted to make of how you are different than Litecoin from a regulatory perspective. On this note, I think I've said my piece as to why now RavenCoin, the tech of RavenCoin is not a security, I believe, in my non-professional opinion. But the way it was launched and the way it was marketed and the fact that you were involved makes that a very, murky situation, at least for me as a non-professional. And that's why I would not be in your position right now. So on this note, I can give the floor to you, Bruce, to try and explain your side and what your lawyers have told you. And then we'll let the lawyers of the program, fire away.
Great. Thanks. I think you made great points. I agree with most of the things. I just have I think a different interpretation of the SEC laws and the Hinman speech that you're mentioning. But first off, I take these regulations very, very seriously. I've looked into this for 3 years. I've been talking about tokenized securities. I'm very careful about what I say. I've been regulated for 27 years. I've never had a single complaint or customer issue. I don't take these things lightly. My entire company, Chainstone Labs, is built around the tokenized securities business. We have a plan to issue multiple securities, both exempt and perhaps fully registered. We're exploring those kind of things. So we have absolute intention, probably more than almost almost any other company I know, certainly any that have been around a few years, of being very aware and compliant with these rules, because we've been governed. Unlike, I don't think anybody in the crypto space has, as a company that is working in this, has been governed by these. So I'm definitely not flippant about these things, and I do take it very, very seriously. And I think that I would be comfortable speaking with the regulators about it and explaining why I don't think that this would be considered a security. So a couple points. Your points about the differences with Litecoin are a great place to start, because those are differences. It is a different environment. People do have the expectation of profit. There is a different regulatory environment. I am more well-known now than Charlie. Charlie's more well-known than me now, but I'm more well-known now than he was then. But I don't think those points are relevant to it being a security or not. In the Hinman letter, he specifically mentions, if you scrolled up from those points that you mentioned, he specifically mentions sales, and he specifically mentions funding, and he uses the example of someone who is trying to raise a token in order to fund a business, and that is that is very consistent with all of the language that the SEC has had on this topic. They care about when people are receiving money. They care when people are exchanging money. Every securities case that there ever has been has had either money or something like money exchanged from one party to another. It's either formed an investment contract or something like that. The basis of the securities laws are the definition of what a security is under the 1933 Act. We don't. It's confusing to see the screen there. If you could change it back, but the basis of what defines a security is the Securities Act of 1933. That definition is very, very broad. It's supposed to be very broad. The Supreme Court has even said that it should be interpreted broad. It includes all these terms: debt, debenture, note, everything. And there's been many, many cases, which Jason is an expert on, which can point to things like the case that you shared earlier, where, you know, shares of a credit union, all of these things where one party receives something, money or something like money, in exchange for something that meets the terms of the Howey test or the definition. In the case where you have an open source project, there is a very, very fundamental difference, and the structure is the difference. Where in all of these cases, and in what the Hinman letter and his speech, and in every single case in the history of the SEC, there has been somebody receiving something. So you have a differentiator between promoters, developers, whatever, who are receiving something from someone. In open source, no one receives anything from anyone. Everyone contributes to the hash rate, and that is the structure and the mechanism that open source is. Software is given away freely. Now, this is also why I think that these issues about control and promotion, and the entire context of the Hinman letter, is basically, my interpretation is that he's basically saying, look, if you're out there raising money, all bets are off. If you're raising money, I feel that you almost have to prove you're not a security. If you're raising money, it's very, very different. Then you have to go and say, oh, no, I wasn't promoting, or I was promoting, or I don't have people expecting a profit, or I don't have control. You can dance around and make all these arguments about, does it have utility? Will our network be developed? When you give something away and you do not receive money, it's a completely, completely different type of relationship. And I think that alone, the fact that you are not receiving money, is a very, very, very key point. And I'm not a lawyer. I'm not going to argue with 5 lawyers about the intricacies of the law, but I will say that if you look at I do know one stat, which is that every single case that the SEC has ever brought, they've said, follow the money. Who received what? I and the developers and the other people who were instrumental in working on RavenCoin never received anything from anyone. Now,
I got a question for you, Bruce.
Sure.
So you don't consider, solicitation for hash power as a substitute for solicitation of money to sell your token?
Sure would, and there's courts that had said that it would. The Garza case says that, but only if I were to receive the hash power. I didn't receive the hash power. I had to give hash power. And when I had my little computers here, I gave hash power. So I didn't receive any hash power. And you know how it works. Charlie didn't receive any special hash power. I have no special receipt of anything than anyone else. I have to gamble on the network like anyone.
But you will be one of the top 10 beneficiaries of that hash power by being a top 10 global holder of RavenCoin right now.
Sure. I don't think the SEC would really differentiate much. Especially me being a high profile registered person who is already under their supervision, I don't think they're going to care whether I have $600,000 worth of RavenCoin or $1,000 worth of RavenCoin. If it was a security, they would have an issue with it either way.
But when it becomes $60 million worth of RavenCoin, they may start to think about it a little bit more, right? You're right. The juice may not be worth the squeeze, which is why later on the show, we're going to talk about like the 200 ICO companies the SEC is going after. And I've heard of like 2 of them. And I'm pissed that they're not looking at, you know, the Veritasiums and the Civics and the Ethereums and the actual stuff that is worth tens of millions, if not $1 billion.
And
I do want to let the lawyers jump in though.
I think, hold on, let me just finish this quick thing. I think that if you, if they were to go through these things, I think at the very, very bottom of the list would be one that didn't receive any money. We never asked anybody for money, never received any money. We asked people to donate to the hash, put hash towards the network, but I did that as well. And that mechanism is exactly the same as all other proof of work coins. Now, there are some of these differences with, how it was promoted, whether it's controlled or not. But again, I think those are only relevant if you're asking for money and assuming that it is a security. And as far as things like, fame, influence, how much holding you have, you could make all of those arguments about anything, even Bitcoin. Andreas is a Bitcoin holder. He can affect Bitcoin price. Greg Maxwell can affect Bitcoin price. Not as much as I can affect RavenCoin price, but that's only because it's a tiny project. I like FlorinCoin, which is a little smaller than RavenCoin. If I start talking about FlorinCoin, that doesn't make it a security. Roger's actions, it's interesting you use Roger example. He has influence, but that in itself doesn't make something a security. People have the right to be centralized. People have the right to talk about something and have total control of it. I could make Bruce Fenton coin and have total complete control. I didn't write, by the way, I don't have I don't have to prove that I don't have influence over RavenCoin. They just had a fork the other day. I didn't even know about the fork because I had medical issues in my family. I didn't even know about the fork. So I certainly can't affect the development outcome. I've never written a line of code. Everybody knows that. But even if I did, if I made a new coin called Bruce Fenton coin, I say, yes, I have absolute control and I'm absolutely promoting it. I still don't think that makes it a security, nor does my recognition. Certainly by that logic, you could say, well, Charlie wouldn't be allowed to make a new coin now, or Andreas wouldn't be allowed to make a coin, or Greg Maxwell wouldn't be allowed to make a coin because they're too famous.
Bruce, if those guys did make a coin, we would be having the same conversation with them at this point, right?
That'd be a great conversation to have.
They're not allowed. No one is saying they're not allowed, but they would sit under the same criticism from me and some of the other members on this panel. Though I do want to get some thoughts. Anybody want to jump in? Maybe we'll let Jason go last. Maybe we'll get like somebody else's take on this and just say what you think about our discussion with Bruce. And we'll let you speak for a little bit to get all your thoughts out. We'll try not to interrupt.
I'd love to get in on this. This is a really fascinating topic. And at the end of the day, I think I have to side with Bruce on this. I always go back when we're in this regulatory gray area to what the purpose of these securities laws are. And I say it every time we're on the show. And one of them is making sure that we have proper disclosure and protocols in fundraising. And I don't see that there's really a traditional fundraising aspect to this. There is never, as Bruce has mentioned, there's never been anything that looks like this that has been deemed a security. There are certainly factors that are that would weigh in favor of finding a security. But I also, in addition to litigating these issues, I also represent various clients who are trying to get projects off the ground. And one of the things that I tell them in this regulatory environment is we're looking at a spectrum, and there's really a bell curve of probability. And if you add features to a project, you're going to get closer to regulation. If you take elements away from a project, you're going to get farther away from the concerns of the regulators. And so I do agree, that there are some features here that would tend to implicate the securities laws, but I think it's a bridge too far. There's definitely concerns of the securities laws that are implicated here, like fair disclosure and and orderly markets and things of that nature, but it just doesn't seem to me to fit within the securities box. I think that this is not, you know, if we go back to 2015 and 2016, everybody thought that ICOs weren't regulated, that they were in a completely black box. And that's probably not and that turned out not to be true. So maybe these proof of work coins have some regulatory box that they go into, but I don't think that it's the securities laws. And I think that what we're going to see is further regulation that comes out that puts a finer a finer point on this. And again, I'm sorry if I'm rambling. I'm not feeling well today, but that's the best I can do. And I'll turn it over to everybody else.
Yeah, no, Bill, thanks. Actually, that's exactly what I wanted to say. Like when you started off that sentence, you side with Bruce on this. Anybody else not named Jason want to jump in with their general thoughts? We'll get to Jason last.
Hey, I have something to say. Hey, Bruce, I'm glad to see that your son is doing better. I had the opportunity to hang out with him a few years ago in Austin. Super cool kid. But hey, so I know you're kind of concerned about your appearance as a possible promoter of RavenCoin, and I'm just curious. I really don't have much of a side on this, but I'm just curious if you've like entertained the idea of like divesting or something like that.
No, I'm not worried about being seen as a promoter. I'm definitely a promoter. I would gladly admit that. I've promoted it. I believe in it. And I'm also a promoter of Bitcoin. I'm also a promoter of Litecoin. I'm also a promoter of Coin. The only difference with these is how much influence I have. If I really, really dedicated my life to being influential in Coin, I probably could do that. If Andreas joined RavenCoin, he would instantly have way more influence than I have. So that's the way open source works. I don't think many people have much influence on Bitcoin, but I have a tiny bit. I could probably affect the market for a day or something like that, like other influential people. But yeah, I'm a promoter in Bitcoin. I believe in it. I think that is, and by the way, people are, even if something is a security, you're allowed to promote a security. I even as a non-registered investment advisor, I can say I like Apple. Everybody is allowed to say that. Where it really becomes an issue is when you're exchanging money. If you're saying I like Apple, buy some from me, or I like Joe's Barbecue, buy a 10% share, or I like RavenCoin and I'm selling RavenCoin, or I'm selling Bitcoin, then it's a different area. Not all of those are necessarily securities, and even if they are, they may be under exemptions, or they may be nonprofits, or other things which would avoid legal problems. But when you're asking for money, that's when there's a real issue.
Well, Bruce, let me add something into that, right? I think there is it's a little more than that, right? I think everything you said is true, right? But there is one additional component. The higher you up on the Apple, corporate food chain, the more it's scrutinized, right? Like, for example, what the CEO of Apple or the CTO of Apple says about the potential investment in Apple stock is taken very, very seriously, right? So it's not just an average person. Like the way you described it is how you would talk about Bitcoin, but you can't talk about your statements, your equivalent statements about RavenCoin have a completely different weight because of your stature within RavenCoin versus your stature within Bitcoin. So there is a big difference there. It's not about what you say, it's also about the messenger.
Yeah, you raise a great point, Tone. It's Manny. I want to jump in. So we're really talking about issues of, really two fundamental issues: control and beneficial ownership. Both are clearly and highly scrutinized, Bruce, as you know, in terms of individuals who are those who can control organizations and their beneficial ownership, right? These are closely monitored and followed, and there clearly are restrictions around transactions that control individuals, usually officers, directors, what they can and can't do. So outside of someone, making money directly, receiving some type of compensation for promoting something, at the end of the day, if someone is a control individual or has significant beneficial ownership, which requires, in the SEC world, disclosure, public disclosure, their actions are monitored. I just want to draw a quick comparison. Elon Musk made comments about privatizing, Tesla the other day, and that's highly being scrutinized because who he is, his significance clearly within his organization and his ownership. So I think those are fundamental questions that we need to kind of consider and ponder.
Sure. I think that, those, when you talk about control organizations and ownership, particularly something like Tesla, those are clearly securities. And it's under the rubric, under the overall, assumption that it is a security. The organization, the control doesn't matter if it's not a security. I mean, if it's a corporation and it has revenue and that kind of structure, sure. But open source coins are very, very, very different. Not all things that are control organizations are securities. But if they are a security, sure, all of those issues of ownership and like the things that Elon Musk has for influential about Tesla, I think are relevant, but maybe not so much if it's not a security. And I think it comes back to the structure. Is Litecoin a security? Is Bitcoin a security? Because nobody says who controls Bitcoin or who has ownership. And if you made a fork of Bitcoin, as I mentioned with the Andreas example, Andreas could make a fork of Bitcoin. He would have great influence over that. He may have great control. He may buy a bunch of it and have a great ownership. Still doesn't make it a security.
No, that's a fair point, but let me just jump back in quickly. What I think we're talking about, it's an interesting kind of phenomenon where I won't say there's a lack of regulatory guidance, but there are a lot of ambiguities, right? And I've used this analogy before. There are a couple of lanes that we're in right now, right? There are a couple of lanes laid out by the SEC, and depending on how the SEC could view this, and I think this could fall into the bucket of the lane of being a security. If that does apply, then all those other triggers would come into play in terms of control, beneficial ownership, and all that. I think the problem is we're making comparisons back when the SEC was really not taking actions against ICOs, and the regulatory guidance was a lot less than it is today. So I think the comparisons we're making between things that were done years ago, 2011, 2012, and today might not be the best comparison. And because of the fact that time has passed, it's really difficult for the SEC to take action against something that occurred 7 years ago where they didn't take action.
So I'll jump in because Bruce, I'm going to mildly defend you here for a second. I totally agree with Manny. I think part of the issue here is a lack of clarity from the government. And people who, and I've said it on this show, I say it all the time, I think that clarity is going to come in 2019 and 2020. So while everything Jason says is true, I'm not going to say everything Bruce says is true, because while we're on a streak on Twitter of mildly agreeing on a couple of things, I tend not to be on the same side of the conversation as Bruce. But Bruce's argument is a little bit different than a legal argument, as we're all arguing in a vacuum right now. Because while there's been preaching by enforcement by the SEC and the CFTC, there has yet to be a real regulatory fight over the interpretation of a rule promulgated by the government or a regulatory body. So in 2018 and I think it's going to be 2019, maybe 2020, what Manny's saying is very true. For a while now, if you use the Hinman speech, I always disagreed with the conclusion of what the SEC was going to do, but I always agreed, and before the speech came out and before the SEC did anything, there was no way they were going to unwind Ethereum and ETH and unwind the transactions, say it was an illegal securities offering. They always had to come to the conclusion they came to. Now, they excluded out, obviously, and it's a big caveat, is the actual offering. And I do think there's a deferred prosecution agreement. There's something with the government where Vitalik has already agreed that there is going to be a slap on the wrist for the offering. So until there's clarity, is RavenCoin, isn't it? Look, I believe if the early adopters, after an investigation and can shown to control, let's call it 60%, 70%, 80%, it doesn't really matter that they're claiming that they got it without an offering. If they're all walking away with Lamborghinis, it goes back to the Lamborghini rule. If all of the people who were initially involved, who got it onto the exchanges, are all driving Lamborghinis, they're all going to end up getting in trouble. Now, their response to that's going to be, well, take Bitcoin and take the other way, the SEC didn't go in after those. What Manny's saying, and I agree with this, eventually the government's going to come in and the government's going to do something different. Now, the only way that I'm completely wrong here is if the government comes in and they take Bruce's approach and they say, everybody's okay, which they might do. I mean, there's a distinct possibility the government's going to come in here and say, we let the space develop and everybody pre-2020, we're going to give a free pass to. you know, we're going to give a free pass to the exchanges, to the ICOs. There's a possibility that happens. Now, this is where Bruce and I disagree. Bruce will tell you that even if you interpret the law as it stands today, he thinks he's got a position that's on the high side of the mountain. We can disagree with that, and we can disagree with that both by the case law as it stands from an older generation and moving forward. But here, I think the SEC is going to do something in the next 2 years. I think they're going to give more clarity. And I don't think that the clarity they're going to give is going to be the clarity people who did ICOs and people who are doing the coin releases particularly want to hear. But most of those people, to be fair, are also anti-regulation and anti-promulgation of rules that will limit them in a free enterprise.
You know, I think that's actually, David, really kind of cogent. And it was one of the things that I was thinking, you know, if we can take a look at, for example, where RavenCoin, the launch of RavenCoin is right now, it might be reminiscent of where ICOs were in 2016 and mid 2017 before the SEC came out with their DAO report. And everybody said before then, well, there's no precedent on this. And it's, you know, these laws clearly don't apply, and it's in a regulatory black box. And we may be looking, you know, retrospectively in another year or so back at this type of thinking that we're discussing now, and that it was a bit premature. Because one thing we definitely can say for sure is that the issuance of a coin, whether it's a decentralized or not, is not outside of the scope of any type of regulation. And probably what we're going to see is something like the SEC, if it's the SEC's bailiwick, to come out with something like Regulation D, which is, you know, how companies that comply with exempt offerings, there might be regulation crypto. But I think until we get that, I think that it's very hard to take a project like RavenCoin and put it into the securities box without stretching it beyond the breaking point.
I agree with you there, Bill. I'm sitting here quietly, but my blood is kind of boiling at the thought of RavenCoin being classified as a security, because if it is, then we have to classify Bitcoin and Litecoin as securities, and anything that's ever been mined has to be a security, because it's all, like, to me, the difference.
Jason, don't go anywhere. No, sit down.
The difference has always been, in my perspective, they're saying, okay, if you have an investment contract, like the 33 Act lists a ton of different things that create a security. Most of them involve things like the traditional stock market, where you have ownership in the company, you have a dividend, you have a voting right. The only little caveat, well, I don't want to say little, but the only caveat to that is if you've created an investment contract, and then that brought about the Howey test. And the first thing of the Howey test is an investment of money. And when you're doing mining, there is no investment of money. So I don't see this as a logical flow. And if you look at the facts today, the SEC has come out and said that Ethereum is not a security. Ethereum is far more like a security because of its initiation as an ICO than Raven would be considered today. So because of Raven's initiation as mining. And I think if you look at Raven, it's quite decentralized. I'm not a technological expert on what decentralized actually means, comparing the Ethereum decentralized network to the Raven decentralized network, but I would think that there's significant argument there that Raven can be considered decentralized. So the whole idea behind that Hinman letter was to say that if you're decentralized, you are not a security. So I find this argument, I don't think Raven is one, but I know there it's a close call.
I want to say just like one or two things, and I'm going to hand it off to Jason. So I don't think Jason, I'm not going to make the case, and I don't believe Jason is going to make the case that RavenCoin is the security. RavenCoin is like oranges. Oranges are not a security. But if you are promoting contracts on those oranges, so we're not saying that RavenCoin is a security. We're saying that the actions of potential actions, or the actions of Bruce Fenton and Pepe the lawyer, are potentially creating investment contracts of people that are interested in RavenCoin, the decentralized science project. Okay. Now I will make one more. I want to make one more statement in that a lot of people equate RavenCoin, like Bruce's, to Litecoin and Litecoin to Bitcoin. Now, and they're saying, hey, it's an open source project. There's nobody in control. Now, the reason why proof of work blockchains are considered decentralized projects is because A, Satoshi was always anonymous, and B, Satoshi left that project before it actually had any significant value. And Charlie Lee then tried his experiment, and he spent the last 3 years basically disassociating himself, probably for the purposes of regulation, to make sure that the world knows that he is not in control of Litecoin. Vitalik has done a much poorer job of doing so. But I think it would be, let's just put it this way. It's a lot easier for the invisible Satoshi to make the argument that he has absolutely no control of Bitcoin than it is for Bruce and Tron to say that it's just a decentralized project, we have no control. So I just wanted to get those thoughts out there, and now I'm going to hand it off to Jason.
Boy, where to start? So I think, yeah, just right from the beginning, let's talk about the purpose of the securities laws, right? Purpose of the securities laws, as I've said for multiple years, and Bill touched on, is to put adequate protections over the general public from those that would run scams against them to try to take their money or take advantage of them, right? So before, we used to have self-regulation or self-help. Someone would steal something or do something bad to somebody, and what would happen? They'd get out their saber and they would have a duel. Then it turned into guns. They would have a duel. And then all of a sudden we became civilized, and self-help and revenge wasn't the preferred method anymore. We'd take things to the courts. Then we had governance, and people started making laws, right? And now we have law after law after law. One of the main arguments that I made in the Shavers case was that I didn't believe that the courtroom was the correct place for the SEC to determine that something other than money, which I agree with Bill, there had been no other case, and there had been no case, period, that the SEC had brought or won or that was on the books that ever involved anything other than somebody giving money, actual currency, in order to form an investment contract, right? Until the Shavers case. And I informed the court was not the place to do rulemaking, that the SEC needed to go back, do proper administrative rule promulgation in order to change the definition of money to include cryptocurrency, not run to the courthouse without notice, comment, opportunity to be heard, and proper rulemaking in order to change this kind of way that the securities laws were going to be interpreted. Because up until that point, money had a clear definition, and the SEC was bound by that definition. Today, we have something other than money, because Judge Mazant said, well, for the purposes of an investment contract, Bitcoin was used as money. And so therefore, we have a formation of an investment contract. If a cryptocurrency can be determined to be as money for the investment contract analysis, that means you expand the scope. The gate is basically open. Pandora's box has been opened. How do we get to a cryptocurrency? We get to cryptocurrency through hash power, computational power, consumption of electricity. All of those are commodities that are combined in order to form something that can be determined to be a unit of value, substituting for what would normally be currency within an investment contract analysis. So what do we have? We have Bruce admitting he promoted, Bruce, Tron, and others that are within the Overstock empire said, yeah, we're going to work on this project. Now, whether it can be shown that there was some correlation or some thought put into before the release of RavenCoin that they were doing it for the sole purpose of creating an asset platform, then you have a de facto partnership in there, and you have the formation of an organization, and you have management and control for the release of that. Then what do? Hey, everybody, we're going to develop this code, and please run this code, and in exchange, you're going to get coins. All right. Run this code, giving your time, effort, energy, and hash power, electricity, computational power, et cetera, and your time that you could normally do making other coins, point it towards our coin, or towards our software. And in exchange, you're going to get coins out of it. Then what did they do? You even heard Bruce say it. Bruce started buying it. Overstock owns it. They started creating a market to where it became profitable. They're propping up the market, maintaining it. In fact, since we started this broadcast, I've been watching it. Today, RavenCoin was down 2%. Now it's up over 1%. That's a 3-point bump just from having this conversation. So I don't think it's outside of the realm of the existing securities laws to be able to determine that there is an artifice or a scheme at play to be able to create a market, to be able to offer that creation of market, for people to work towards getting that, to get rewarded with that, with an expectation of a profit. We have all the elements of an investment contract. Now, is the RavenCoin itself, RavenCoin as coin, is that a security? No. Just like Bitcoin as Bitcoin wasn't a security. But here the offer was, mine our coin, and you will get coin in return of which we are going to support, or that we are going to prop up this market. So that's the investment contract. I think a lot of times within the securities analysis, it's very hard to separate the nuance of where the transaction is, where the investment contract is formed, and how that can be formed. Again, I was pointing to SEC v. Glenn Turner long before the Dow of where that line is crossed, and that it's not very clear all the time in a very blanket kind of bright line way. And it took the SEC a long time to really form that argument. It was a difficult argument to make, but at the end, it was the correct decision. Now, I'm sitting here in a vacuum trying to make a prediction on this type of structure, on this type of offering, seeing it as a potential risk for people that are out there doing that this is going to be problematic. This is the same type of prediction I was making back in 2015 with people doing ICOs. This type of behavior could be problematic. And I got the same amount of criticism that I'm getting today. I got the same amount of hate mail, the same amount of horse shit that keeps showing up in my inbox. And I'm sorry I was right, guys, but I'm just looking at the current regulatory rubric. I'm looking at the way that these things get abused. It may not be Bruce or RavenCoin that does it, but if somebody else follows this suit, it's very easy to make a slight tweak to the way that this is rolled out, and bang, now it's an artifice or scheme to defraud. And so you have to look very closely at those nuances where you have to turn around and look down and figure out, is that the line that I just crossed? Now, Bruce, are you violating any laws here? That's not for me to decide, right? I'm just an attorney. I'm not a judge. But as an attorney, the first thing, as all of these attorneys know, is you go to law school to be able to predict the future. People always want to know what's going to happen. We all have our own crystal ball. All of our crystal balls are programmed in different ways. Unfortunately, for better or for worse, my crystal ball has been pretty in tune with the regulatory environment. People don't like to hear me say it, but I'm trying to give people information so that they're prepared for when it does happen, not necessarily just feed them information that they want to hear. Does that make sense?
Well, I think it's funny. I just want to add one point to what Jason just said. When I was speaking and I was coming up the circuit, I used to get booed, like literally booed off the stage in 2016 when I said there's no such thing as a utility token for the way it was being sold. And when I finally got vindicated and it really began in early 2017, people finally were cheering and they loved David. I love David. But my point being, I feel like we're in the same exact space as we're talking about how different cryptocurrencies can be utilized as money. And I won't use RavenCoin. I'm going to use Nano. I'll use another, company that, I think they did a faucet, but anyone who's doing these airdrops, I don't buy just because you're not doing something for actually selling. It doesn't mean it's not going to be a security. I think what Jason's saying is something that him and I we agree on tremendously, is we're just reading the tea leaves of what the government's going to do in the future. We're not disagreeing with anyone right now for what the government is doing today because, and again, there's a lack of clarity. And the problem that we're having here is the lack of clarity, not what the state of the law is, because the state of the law is in flux.
I want to Yeah, no, thanks for that, David. I just want to also point out, because in Jason's awesome speech, by the way, that you just did, you did not mention the Pepe letter, and the biggest issue that all of us had immediately on this channel last week with the Pepe letter, it wasn't the fact that it was written. It was the fact that he wrote it. And he is a known person who is, again, an influencer within the RavenCoin community. And he admits that he's holding RavenCoin. He may not be as open as Bruce as to how many RavenCoin he has, but it's the assumption of everyone on this panel, and should be the assumption to everyone at home, that by him writing that letter and assisting getting RavenCoin listed on one of the most popular exchanges would benefit him financially by being a RavenCoin holder.
Let me ask Bruce this question, and this might be a question that he may or may not know, but if we can find out by the end of the show, that this would be interesting. This is something that I was talking to about with Adela the other day, as I'm actually drafting a letter for an exchange on a coin. I'm not going to say which coin it is.
And you don't hold that coin, correct?
Correct. I don't hold that coin. But in part of my requirements of doing that independent analysis, I make it very clear that regardless of the outcome, that the letter is going to be independent, whether it's for or against. But one of the questions and one of the things that I looked at after the Hinman letter is to be able to come up with a metric for decentralization and some sort of mathematical ratio, some sort of evidentiary proof. And so to the extent that Ethereum is decentralized or allegedly determined to be decentralized, because quite honestly, I don't actually believe it's decentralized enough based on the reality of situations, but this is the regulatory environment that we're in. And if we're going to be using this as a metric, fine. Bruce, what I'm curious about is the number of transactions that take place within the RavenCoin network, and make a ratio out of the number of transactions versus the number of individual decentralized mining rigs in order to create a decentralization to hash power type metric. Right. So do you understand where I'm going with that?
You're muted, Bruce.
Bruce, you're muted.
No, not sure where you're going with it.
Okay, so there has to be a mathematical equation in order to determine effective decentralization. Do you agree?
Yeah, I would agree in principle with that, sure.
Right. So if we can figure out that ratio of transaction to decentralization for Ethereum, and then we could use that as close to a bright line as we could get for other networks that want to claim that they're decentralized. And this is something that I've been giving a lot of thought to after the Hinman letter, because like it or not, whether I think something is sufficiently decentralized or not, that's the line that we've kind of been given. And so as a lawyer, I want to then be able to use that metric as being able to say we have met the Ethereum threshold or we've not met the Ethereum threshold of decentralization.
Well, there's more to it than just how many nodes there are relative to transactions. It's how many nodes there are, what kind of nodes they are, whether they're mining nodes, who writes the code, who influences the code, who decides what fork to follow, what influential people there are who could influence, choosing what fork to follow.
Now you're arguing my point.
What's that?
I said, now you're arguing my points.
Well, there's a lot to it, to centralization. Yeah. I don't think that a non-security needs to prove anything about centralization. That's why I use the example.
Bruce, my question was hash power to transaction.
You need to listen to what he's saying. He's literally saying, look, let us take what we know about Ethereum thus far and try to apply actual metrics in sort of coming up to a determination of adequate decentralization. That's what he said.
There actually are metrics, Adela, and there's not something that have been recognized by the regulators, but I remember actually there was a conference at the 2017 blockchain. I'm looking at something I wrote about this earlier, the Blockstack Summit last year. And I want to give credit to this, Mr. Srit, I can't say the name. Anyway, a very talented gentleman gave a presentation about how you can use Gini coefficients, which analyze the concentration of hash power that you need to control a network, and also Nakamoto coefficients, which is similar to that, but it's about how many individuals in a network you need to control the network. There was actually some really interesting, and again, if you look at my blog, I'm not going to try to shill it, but if you look at the Gini and Nakamoto coefficients for Bitcoin and Ethereum, they're actually quite high, which tends to indicate that there is some kind of a control. Now, I don't know whether anyone's going to use that or not, but I think that there are metrics that could be interposed in this type of analysis.
Yes. I just want to say one thing. Like, so that whole Heinemann speech, while it was good, he did sneak in there that Ethereum is, might have been a security, but it's not a security anymore. I'm still not convinced this is the SEC's permanent position. The way the SEC
definitely, but I think
but everyone is treating it as the final ruling on Ethereum.
No.
I think that's hugely misguided.
What you're missing, Tom, is that you're talking. Look, I do both plaintiff and defense in the securities crypto world, and so I try to stay very level-headed on what side of the argument I'm going to be on. And the point is, what we have as lawyers today is we have all the securities laws going back before 1933 Act, right? Blue Sky Law. We have 50 different states. I tweeted earlier that if you don't know what a merit review state is, you probably want to find out. We've got NASAA, the securities regulators' coordinated effort for all the states that are doing a crypto crackdown. Some of them are applying their laws differently. So you need to go and you need to look at all these various laws. But the one piece of guidance that we have, do have right now is one voice within the SEC that's saying, look, if you're in these types of activities, maybe you are a security, but if you've crossed into this threshold of decentralization today, you wouldn't be a security. That doesn't excuse all the previous acts, right? We all agree on that, right? That today, moving forward from this point in time, if you reach this point of decentralization, any activity after this sufficient point, fine, you're not a security, but before this certain point, you definitely will be. That was the carve out of Ethereum from, in the ICO sales and the pre-network launch sales that make a difference there, right?
Yeah, but I don't know. From rumors that I'm hearing, that's not an official SEC position. It's just one guy who happens to say it, and he probably should not have mentioned the word Ethereum because we will see how it's eventually applied.
So if
they probably needed it to
go ahead, Sasha.
They need that decision that Ethereum's not a security if they're going to make an ETF that is Ethereum based. So I think that probably played into it.
Well, the other thing that I want you to take into consideration is if it's not an official SEC statement, then why is the SEC publishing it on their website with a link in a PDF, right? It's clear guidance that we have at this point in time. It doesn't mean that it's not going to change, but this is what we have right now.
Yeah.
So as lawyers, we need to look at what we have right now and,
But Jason, we've seen a lot of that recently where you follow the rules, you send in a request for a guidance or for, to answer a question, FinCEN or whomever, whatever, pick one administrative agency. And you will not get an official answer a lot of times when it comes to like crypto companies, just period, full stop. And their counsel will contact you and say, I'm sorry, you will never get an answer to this question officially. But the answer would probably be X if we had to answer it. So this is not a new thing. Just saying.
Can I also point to something like in that statement? I understand that it's published on the Ethereum website, right? But you guys are the lawyers. But it says it right there, based on my understanding of the present state of Ether, the Ethereum network and its decentralized structure, current offers and state of Ethereum are not security transactions. Again, this seems like one person's opinion.
That's fine. Tone, what, you know, we can, again, go back and forth on whether or not the Hinman letter is guidance or not. But from a reasonable reliance standpoint, from a defense
realistically, it has to be at least persuasive.
Certainly.
Well,
And I think
this goes back to what I said before. The SEC is specifically doing this. They're dangling enforcement actions, and they're dangling speeches. But until there's actual clarity, people who want to believe this are going to use this. And if they flip, and the SEC flips in 2020, they're going to say, yeah, that was a speech where he said, you know, and that's adding confusion to the marketplace. You know, of all people, I'm not usually the one who argues for confusion in the marketplace, because I say bad people do bad things, and that's all you need to know. But this speech is exactly my problem with when people say whether you are for or against crypto regulations, everybody should be for clarity. And all this speech does is muck that up, because it kind of sounds like one thing, and you know, people are going to go with that. But in 2020, when the enforcement action comes out and they start trying to say defendant X did this, defendant X is going to stand up in court and hold up that speech and say, look, I was trying to do my best by following that speech.
Right, but whenever you have like a government official, particularly someone from the SEC, they always disclaim when they start out and say, you know, these are my positions, these are my opinions, and I'm not speaking on behalf of the commission. So there you go, and it actually says, you know, in that document that Tone showed, the transcript of the speech, it says, you know, it's my understanding, it's my opinion. So, you know, the problem is there's nothing else. So I agree with the other comments that it's persuasive to the extent there's nothing else to rely on. My point is, you know, the merits and the strength of relying upon a director. Now, he's not a commissioner, he's a director. I mean, think of him in the hierarchy of the SEC. He's a director, you know, of a department. You know, where do the commissioners stand on this right now? You know, we're not hearing anything else. So it's a tenuous situation for us all.
So let's examine what the Hinman letter does and how it impacts, if we're just going to break it down to the 1940s, you know, Howey test. The Hinman letter basically effectively approaches the transaction, the current sale of a cryptocurrency on an exchange, and whether or not that cryptocurrency being sold on that exchange is the offer or sale of a security. And the Hinman letter describes what type of factors you can look at as to whether or not there is sufficient management control, that management and control portion of the Howey test, right? So you've got 13 points there that are basically things that you can look at as to whether or not you can adequately say today, right now, with the sale of that one Ether today, if management and control is there sufficient to be able to hold that as a sale of a security. So what we really have is a 13-part subtest to the 1 of 4-part test of the Howey analysis. So we already have clarity on how to examine what an investment contract is. Right. This is just giving a 13-point analysis on one point of the Howey test. And I thought it to be very helpful to be able to examine that management and control portion. Is there the giving of money? Yes. Is there an expectation of profit? Of course. That's why people are buying it on the friggin' exchange to begin with. Is there management and control? And Hinman approaches that management control function. Am I out of left field here? You know?
One thing that in that Mr. Pepe's letter, he quoted a case that was from 1975 that says, when a purchaser is motivated by a desire to use or consume the item purchased, the securities law do not apply. That's United House Fund Inc. versus Foreman.
Yeah, that's so the way that goes is that's the constructive use test, right? Because you no longer have the expectation of a profit at that point. You have the expectation of using it.
Okay.
Right. Yeah.
So if people are using these things, does that bring it out of this? I don't think it does. I think that's, you know, old, maybe a one-off law, but it's
no. I mean, it's stood for a long time. I mean, I brought an action on behalf of a woman who was convinced to buy a house at one point in time. And, you know, these guys had convinced her that if she bought the house, that they would fix it up and they would flip it, right? And it was a pretty big scam. They ended up bilking her out of $750,000. And what they argued in defense was, well, she lived there and she ran an office out of there, so she intended to use it. So there's no way that the sale and purchase of the house could be an investment contract. right? So they try to use the effective use argument, the intent to use, as a way to get out of the investment contract analysis. However, the court wisely looked at the intent of the transaction, and they looked at the manipulation by the promoter to get around or try to get around the securities laws by having her move into the place in order to be able to obviate that argument. So, even though we have these types of tests and we have these types of cases, nothing is ever bright line in the securities world. And that's something that I think Manny, Bill, David, Sasha, Adele, you can all agree with. Nothing is ever bright line in the securities world.
Mm-hmm.
I mean, I think the one bright line in the 85 years of securities law is when you accept money. I think it's just a real fundamental difference. And I appreciate your words that you said earlier. The only issue I would take is when you say that we're pointing it at our software. It's not our software. It was given away. It's no more my software than anyone else's. Bruce, piece that I had, I gave away.
People from the Overstock organization or supervised or subsidiaries of the Overstock organization conceptualized, developed, and released the software.
No, that's not how it happened.
Oh, okay. So Tron doesn't work for Medici. Got it. All right.
Well, Tron does work for Medici, but the way that you're saying it isn't how it happened. It was the code was forked, and then people joined it, including many people from Medici, and Medici members came on after the fork was done, and then they did quite a bit of work to change the fork. And release the software. I don't think it really would matter so much. I mean, certainly IBM doesn't deny that they have thousands of employees working on Hyperledger. It doesn't make it a security. I think if you look at all of these rules, there's a lot of gray area. There's a lot of interesting things. I think cases like this could be abused in the future. Just to clarify, I was never on the side of saying that ICOs are not going to be securities or everything is going to be fine. One of the reasons that I took our company in the direction of pursuing tokenized securities is because, as somebody who has sold securities for many, many years, the first 18 years of my career, I recognized right away that when you're asking for money, that you are probably a security. Unless you prove otherwise through utility or some of these other things. So right away I said, yeah, this is very interesting. I thought the DAO was absolutely a security. I couldn't believe they did it. From my experience of all of the things that I've gone through for compliance for many, many, many years, I had immediate red flags about that. But I think this is very different. And I think if you follow it through, how something like this would be enforced, it would be very, 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 very difficult, because at the end of the day, it really is, and Jason won't like this, but it really is a form of speech. There's been 38,000 forks of Bitcoin. To differentiate between this fork or another fork or Florin coin or anything else, really gets into deep areas of free speech. You have to say who is a promoter, how did they promote it? I did an experiment after we spoke with Jason the other day, and I went on Twitter and I said, why doesn't somebody create a fork and code it right now as an exercise in free speech? And of course, a couple people did that. Someone could watch this show right now and they could create a fork. And all of the arguments that have been made in this case would be exactly the same. We could make a fork right now, call it Tone Fork, and I could promote that right now live on the show. And it would be exactly the same mechanism. So when you get into these issues of, well, you own a little more and you control a little more, I think it really is going to come back to the same thing that every single SEC case over the last 85 years has come down to, which is, did someone receive money or something like money in exchange? And in this case, no one received money. I donated money to the development. Overstock donated money to the development. We didn't receive that. Now, of course, any participant in any of these networks wants to have their asset go up in value, but that doesn't make it a security. I can contribute to Litecoin. I plan on launching assets on the Blockstream Liquid network. My tiny company won't have an effect on the Bitcoin price, but certainly I believe in supporting Bitcoin. And even if I had a huge audience like Andreas and could have more effect on Bitcoin, or if I was Adam Back, it still wouldn't be a security. And when you talk about issues of serious control, it's talking about things like forks. I didn't even know about the fork. I'm not a coder. I don't have any ability to affect those kind of things. So I think that at least if they were to look at the 1,600 ICOs, and we would be ahead of all of those because there was no ICO. Those of us who participated in the community, if they're looking at a differentiation between me and other members of the community, I think that's fairly hard to do and fairly hard to define how that would be specifically different from Litecoin or any of the other 38,000 forks that have occurred.
See, it's like when you say things like, Oh, I'm sorry, Bill. Go ahead.
Oh, no, go ahead. No, Adela, you haven't spoken in a while. I was gonna
Yeah, no,
point.
I'm just listening to everything.
I'm gonna say it real quick. But Bruce, even in your speech just now, you started off talking about money, but then you specifically said something like money. And in this digital age, over the last 10 years, we are realizing that something like money can now be anything in a digital age. And Jason was making the argument earlier that hash power could be a substitute for money, just like Bitcoin was a substitute for money in the Trendon Shavers case in 2014 or whenever it was. Hash power could also be considered a substitute for money. And this is where some of this murkiness is going to kind of show up in this case. So Adela, back to you. Oh, muted.
Right. I tend to agree a lot with Sasha on these issues. I think the SEC asserting jurisdiction on everything that even resembles a security offering is just simply a slippery slope into some serious agency mafiadom, you know. But it's when Bruce says things like Overstock donated money to the project. You know, it gives me a little pause. I'm like, why would they donate money to this project? Generally, when I donate money, I'm doing it for charity or because I know my homeboy is about to build something fly and I'm probably gonna make some kind of X, right?
Well, I think I agree with you, Adela, too. You know, one of the things we do know about the securities laws is that courts and the regulators will look at form over, substance over form. And I think that's one of the things that participants in the marketplace have tried to do is to say, well, for example, we're not going to call it an investment, we're going to call it a donation, or we're going to use these words that seem to get us outside of the scope of the securities laws. And I think that's probably not a very wise.
Tezos is a good example of that.
Yeah, like I said, I can't comment on Tezos because I'm on the case, but that's what came to mind. I will say this: I think that the way Bruce and Overstock and the T0 project have launched the RavenCoin as a mechanism to create their securities token offering platform is actually quite elegant. It's definitely on the edge of the law. I think that it was done in a way that is probably about as close to squeaky clean as you can get in the crypto space. I mean, we have to have an ability for founders and developers to release projects onto the marketplace. There's always going to be a genesis from somebody, and I hear everything that you're saying, Jason. I think that this is, as I said, a very fascinating topic. I will say that I have to go. I have some clients that are expecting some things from me today. So it's been a pleasure, everybody, and hopefully we'll talk next week.
Yeah, Bill, thanks for coming on. Just I have a better example for you in everything you just said. And that example is, if you're still with us, Bill, and that example is actually Ethereum, because I think Ethereum can make the claim that more than 50% of all the people that contributed to that Ethereum JSON file were doing it as a donation for the project and did not actually expect to financially benefit. Now, that I find very ironic, because I think more people contributed to the Ethereum ICO without the expectation of profit than for something like RavenCoin that did not even have an ICO with their hash power or buying into the early tokens once they became available for sale. And I think, and if anyone can explain this to the SEC, that would be a very interesting case. I don't know what you guys think about that.
I think the difference comes to following the money. In the case of Ethereum, they raised $18 million. I was one of the contributors to that. And
did you expect to make profit
Not
on
really.
your-
In those days, not really. But
Correct.
for argument's
then
sake,
Adela,
I think RavenCoin, you're correct that they would people, because of the times, it's 2018.
Right.
People do expect profit more, sure. But again,
Right.
I don't think the profit issue is makes something a security. People expect profit in collectibles and other things.
But I know, but Bruce, but that is that is a specific part of the Howey test, expectation of profit. I forgot if that's number 2 or number 3.
Right, but that
I
alone
think
doesn't
it's a
make you
huge component.
fail the Howey test. Your comic books meet that portion of the Howey test, but when there's no money exchange, there's never been a case in SEC history where they've counted that.
No, the trend on Shavers case. No, Bruce, there was.
Let me.
The trend on Shavers case did not have any money exchange. It was Bitcoin, which at the time didn't have a definition.
No, I mean money. That's why I say money or something of value. And to your argument that hash power can be value and treated just like money or property, of course it can be. Absolutely, of course it can be. But it wasn't given. It wasn't given to anyone in this case. I didn't get any hash power from anyone.
Right now, your coins are getting hash power.
Can I just say something?
Did you just say my coins are getting hash power? Coins don't get hash power. That's not how it works.
They benefit that your coins appreciate in value with additional hash power.
Sure, and that is, but again, that doesn't make something a security. That is exactly the same as Litecoin and other things that aren't a security. And one quick other point, when I say donate, Overstock donates to many open source projects, including Bitcoin, including Florin Coin, and that's a good practice for companies to do. The most well-known donator to open source is Blockstream. The role that Overstock has is donating development time to an open source project. That's a great best practice in corporations. IBM has thousands of people that do this. Blockstream has some of the most well-known Bitcoin developers. DCG does this for Ethereum Classic. Charles Hoskinson's company does this for Ethereum Classic. I believe Fidelity and many other companies have donated to open source. So it's a very, very different thing. I get you what you're saying, where sometimes donations are called something else. But in this case, they really are donating efforts to open source. And that goes beyond just Bitcoin. That's done in Linux and other communities.
A donation, by definition, means that nobody expects to get anything out of whatever is donated, right? And here, it would be risible to say that anybody that gave any money or purchased any Raven coins or mined any Raven coins had zero expectation of any kind of return, right?
Can I say something?
Yeah, Adela.
Quickly?
There.
This is a very brief point, but I remember buying ETH back at TNABC in 2014. I had a conversation with Vitalik. My experience with Vitalik was somebody who was a writer and that he was very bright and he had started looking at the BSA and nobody was really doing that. So we had a conversation about that. He told me about Ethereum and I bought some, okay? I expected to make nothing from it. I didn't really understand. I was like, I don't know. All right, whatever. Bruce, when I read RavenCoin white paper, after you had tweeted about it, I thought, yes, I'm going to make a ton of money buying RavenCoin now because I'm getting it on the ground floor. Because Bruce is on this, he's shilling this. This is my thoughts. Bruce is shilling this. It's going to go like 800x. Okay, I'm just going to leave that there.
Sure. The big difference is that in Vitalik's case, you gave Vitalik money. Crowd sale, people gave Vitalik money. He took it, put it in a bank account. In the case of RavenCoin, I didn't give Tron money. No one gave any developer money. Tron doesn't have a bank account. I don't have a bank account.
So we're not debating that. We're not arguing that. We all
well, I think but that is a key difference. So in the case of RavenCoin, no, I know, but the profit expectation doesn't make it a security. You could have profit expectation on a comic book. It doesn't make it a security. What really matters is when you take money for that. We never took any money. There is no we. I never took any money. The developers never took any money. No one on the project took any money. And that's
except you, the developers, and everybody else that's in the project holds RavenCoin, right? And you got it on an exchange,
right?
And now that thing that you're claiming nobody took any money for somehow magically is worth money.
Well, it's not magic. It's due to our own efforts and the efforts of everybody involved in it.
Based on the people that you asked to mine for.
Right, but that's another part of the Howey test, right?
Again, if you receive money,
on the work and the efforts of others.
Right.
And you're saying right now that your efforts is helping raise the value, and Pepe's efforts of writing that letter, the efforts of the people that are instrumental to launching and promoting RavenCoin are helping everyone with their expectation of profit. And this is the problem that we have.
Right. But when
the thing is,
someone,
when you add all of these things up, and believe me, once I start speaking, people go like, oh, look, Adela, I hate regulation, you know, to law firster. I'm not a huge fan of like stupid regulation. I am not. But I'm just saying, when you add up all these things, you know, T0 platform, Medici, you know, Bruce Fenton, RavenCoin, it just has the aroma of 800X.
Yeah.
well, that's fine though.
This is the Lamborghini.
So does Bitcoin.
And also a sort of
That's David's Lamborghini test.
Yeah, so I mean, but that's it. If for
But
some
in
reason-
itself, the offering in itself, I would have made absolutely zero. If I did the offering and didn't buy coins or mine coins, I would have made absolutely zero. So my actions.
And you probably would not, and we probably would not be having this conversation with you today.
But you can't say that I'm not allowed to buy a coin I like just because I promote it.
No, but Bruce, here's my difference. And this is where the ambiguity comes in. If it turns out that, you know, there's a government investigation or a lawsuit, and it turns out 3 or 4 of you guys own 80% of the RavenCoin and are having emails going back and forth about getting on the exchange, and everyone's like, Pepe, we need you to write the letter. And Pepe writes that. I'm not suggesting this is what happened, but there are ways that you guys can come together without simply doing a crowd sale at the beginning in order to turn this into a security. And my point being is, part of the problem is the ambiguity. You're going back to, you know, we're no different than other cryptos that have not been declared a security. I don't believe that is the full status of the law. I think we're going to learn about that in the next couple of years. But I don't think it's as simple. And, you know, when Pepe was on the show last week, he was turning around and he was saying, you know, I did this as a person who I was just giving my opinion. First he said, I just wrote this for myself. Then it was an opinion for the exchange. And the point being is, there does appear to, at least on a superficial level, that there does appear to be a central control group for RavenCoin. Your argument is that's not true. I simply am a member of a community. I have nothing more to it than that, and that makes it not a security. I'm not disagreeing. I think the SEC needs to come in on all these cryptocurrencies and say, look, it either is or isn't. But I do believe right now, as we sit here, that there is a central group here who has been very successful in doing something. And this would be examined further if RavenCoin went to $1,000 a coin. Because at that point, everyone would be driving the Lamborghinis.
Can we stop talking about RavenCoin? I feel like every time we have RavenCoin on the show, like, oh shit, maybe I should buy some.
We're
But here's the thing, right? You know, before everybody else, because we're in our little private chat group where we decide what the show is going to be about. So you have insider information if RavenCoin is or isn't going to be on the show. So can that one day be like, let's say, insider trading on insider information, because we know what coin we may accidentally pump based on the topic?
I will say this.
I don't own RavenCoin for whatever it's worth.
I don't own RavenCoin.
Neither do I. I don't know any. But I will say this: had any of us acquired RavenCoin prior to the show, we would be up at least 3% on our holdings from the show started.
I wanted to, Adela, I do want to get you back in here, but to David's point, when you say the SEC needs to come in and make it black and white, I think that could complicate it even more, because RavenCoin is clearly came up with a brand new gray zone that I have not seen before, because honestly, prior to RavenCoin, I thought the ability to launch a proof of work crypto with the ability to pump was no longer possible, because I didn't think someone with, a stature like, again, Patrick Byrne, Overstock, Medici, Bruce Fenton, I didn't expect, like, for example, I know that if I was to start a new proof of work crypto, I could probably pump it, but I'm not going to do that. This is why Andreas is not going to do it, and I'm not going to do it, and Adam Back is not going to do it, and a lot of the Bitcoin maximalists that I plan to have at my conference, they're not really looking to do it, even though some core developers, some lesser core developers went and tried, like the Decred project, for example, right? So I actually thought that the profit in launching a proof of work coin was dead. I thought those coins were dead. And Bruce and Tron are bringing that business model back. So had the SEC come in and put in all these laws with the expectation that another proof of work coin, an honestly created proof of work coin like RavenCoin looks like it is, if that possibility was no longer on the table, but now it is on the table, then them making this stuff black and white can cause even more issues because someone's going to want to get in between those laws.
Right. And these regulatory agencies like to keep things generally very, very ambiguous and very broad. And broadness is something that often works in their favor. Because, you know, when it's broad, you know, you can kind of have it swing either way you want it to go. And if you don't believe me, you can go look at any guidance written by FinCEN on the Bank Secrecy Act. And it's really interesting because when I look at RavenCoin is sort of very typically what you would call a convertible virtual currency, which is distinguishable from like what the BSA or the Bank Secrecy Act, to spell it out, defines as real money. So that is the coin and the paper money of the United States or any other country that is designated as legal tender, that circulates and is customarily used and accepted as a medium of exchange in the country of issuance. And so how they differentiate virtual currencies, that they call it as a medium of exchange that operates like a currency in some environments, but does not have all the attributes of real currency. So for me, you know, using my sort of like BSA hat, it really fits very squarely there under that guidance from FinCEN. And as far as like the narrowing of any of these, of any of these statements or any of the SEC laws, I just don't know how quickly that's going to happen. I don't know how useful it would be. Obviously, I haven't seen any drafts or heard anything. That's probably a ramble, but.
All right, guys, I think we should wrap up this topic. I want to briefly talk about two other topics, the NASAA CryptoSweep. We can go through them quickly. And what are your thoughts on CBOE launching the Ethereum futures contracts? So final thoughts, anybody can jump in. We'll start with Bruce.
Yeah, I've got to run anyway. So thanks so much for having me. I think this was a useful conversation. I agree with Sasha and the others who feel that this isn't a security. I think if you looked at the whole list, this would be at the very, 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 very bottom of the list. I've dealt with regulators for a long time. I think the first thing they look at is, follow the money. There's some misunderstandings about how this unfolded. I joined the board of T0 way after RavenCoin was conceived of and started. I told Patrick about the project over dinner in Boston, and then he said, "This is the greatest thing I ever saw. This is great. I'm going to tell my team they can work on it. I'm going to encourage employees to work on it." That's what happened. But the coin had already been around for or the project idea had been around for months and months, and then months after that, I came onto the T0 board. But again, I don't think those things are real relevant. All of those issues, you could make an argument about Blockstream. Certainly, Blockstream has very, very heavy influence over Bitcoin. They have a lot of influential people. If Adam Back came out and said critical security flaw, the coin would crash. They have all these issues that you could argue of control and everything else, but it really comes down, in my opinion, a good chunk of it is the structure, and it is a very different structure from Ethereum or something like that raised money. So I think as far as even Jason as being a critic, I asked him if there's a more fair coin than this. I think you'd be very hard pressed to find any coin more fair than this. You could even argue it's, at least from an economic standpoint, more fair than Bitcoin. There was only 3 miners on Bitcoin for the first 3 months. So, Hal and Satoshi had this sort of artificial pre-mine. With Raven, it was absolutely fair. And I like what you've said about the nature of the intent of the laws. At the end of the day, the SEC is trying to prevent people from getting money taken from them, which is the word Jason used, by bad actors or whatever. But in this case, there was no no money taken from people, and from a con standpoint, which I think the SEC has looked at, and you look at the many cases that they've had, it's usually somebody trying to get something from someone. If you looked at, how would somebody recreate the perfect crime on this? They'd have to create a project, create hype about it, and then they'd have to trade it. I mean, I'm taking a huge risk by buying $500,000 worth of RavenCoin. And by the way, as full disclosure, I don't recommend that to people. And there's many statements that I've said, you can lose all of your money in RavenCoin. Absolutely, just like you can lose all your money in Bitcoin. RavenCoin is even more dangerous because it is more speculative and more small and has a much less chance of succeeding. I'm an extremely wealthy person. $500,000 for me is different than other people. I don't recommend it, but I'm still taking a huge risk for that. I haven't been up on my holding at all, so I'm taking a risk. For somebody to kind of repeat the perfect crime, they'd have to not only promote it right, but they'd have to trade it right. Even somebody with a name as big as Andreas, if he said, I'm going to launch a coin, he couldn't pre-mine it, because guess what? If Andreas launched a coin, instead of like RavenCoin, where we had 4,500 miners in a week, Andreas would probably have 10 times that. So he'd have to go, just like we did, have to fight on the open market to get those coins. And that's very fair. And then he'd have to hold them, and then he'd have to pump it, and then he'd have to know when to sell it. All of those are very difficult market risks. And if he ended up with a Lambo at the end, it would be due to lots and lots of other factors. And it wouldn't be from anybody writing him a check.
$500,000 into RavenCoin because Bruce Fenton said he did it, and he's obviously a very wealthy and successful guy. So it might just work out for me too.
You might, but again, I don't think that's a security. I own Litecoin, I own Bitcoin, I own way more Bitcoin than RavenCoin, and I pump Bitcoin a heck of a lot more. I'm very cautious about my comments about RavenCoin, not because I think I need to, but just to address concerns like this, and because of the the issues. I'm extra conservative about it, but I believe that people have a right. And if you think about this from an enforcement standpoint, you're all attorneys. Think about this from a free state standpoint. As Sasha said, if RavenCoin is a security, everything is a security. Because right now during this call, live, people can create their own forks, and they could be the 38,000th fork of Bitcoin. And
Bruce,
you're
forgetting the nuance. I didn't say that the coin was a security.
Right. We're not saying the coin's a security.
I said that the request to the specific request that you made.
But I'm not the only one who made that. A whole bunch of people made that.
The specific request that you made prior to the launch for people to mine it, that's the formation of the investment contract, not the RavenCoin, not the underlying coin.
But if that's a formation of investment contract,
afterwards,
wouldn't that be an investment contract for any of the other 38,000 coins? What makes this?
No. Stop conflating the issues and trying to willfully combine everybody else to try to hide behind the fact
what the difference is.
Because you pumped and promoted.
But if I make
you pumped and promoted a certain activity, which would result in people being able to get something that would make them a profit. That's it. That's all I'm talking about.
Sure.
Is that 4 months that you admit that you were on a road show, telling people about RavenCoin and saying, we're going to do it, we're going to mine it, advertising the date. You even said that you had your daughter press send on the tweet that announced when it was going to go live. You had absolute control of when it was going to go live. You could make sure that you were ready. I mean, the whole point here, there is enough circumstantial evidence to give today. There's enough circumstantial evidence right now to give the SEC jurisdiction to open up an informal investigation.
Well, I'd be happy to talk to them about it. Because
but that's kind of the barrier, right?
It's exactly the same. They can inquire about anything. I'm sure they will. But
no, they can't. They have to have a sufficient level of information in order to open up that inquiry.
Usually the bar for that is whether anyone received any money.
No, it's not.
Okay.
No, it's not.
Well, usually it's whether someone received money or something like money in exchange for something else. And no one received, I have no special ability on the network. I didn't receive anything different from anyone else on the network. I didn't get any special coins. I took less risk, in fact, than a lot of people. There was people.
Oh, so you subjected other people to more risk.
I didn't subject them to anything. I promoted software that people wrote and said, download this software. That's all I did.
This is why people shouldn't come on this show.
And it would be very, very difficult for someone to enforce these kind of things, because you get into these issues. What is to prevent Tone, or somebody from watching this show would be even more accurate, from watching it, making a fork called Tone Coin, and then promoting it? It would be exactly the same.
People watching this show will be wise enough not to do that, for the sole reason of being potentially having an investigation open on them as trying to sell a security. Again, we're not.
But nothing is sold though. There's nothing sold when you're off. I differ with. I mean, I would appreciate if Jason wrote. Let's get to the bottom of this. If Jason could write down the exact statement where he believes that the issuance of the code is the creation of investment contract. Put that in legal language that we.
No, we said that it's not.
No, hold on, Bruce. I sent you that analysis in private Twitter chat the other day. I explained all this to you in Twitter the other morning.
I'd like to put it in a clear.
Everybody agrees, Bruce. Everybody agrees that this is a convertible virtual currency. I literally just
yes, I agree.
2 minutes explaining why.
Right. That's the coin as the coin.
Right.
Right.
Yeah.
And your contention is that by me promoting the binaries, that is some sort of a securities offering. But how, is it a securities offering if I promote the Litecoin binaries? And what
you're not a control person. You didn't conceptualize it.
Is it a securities offering if Charlie promotes the Litecoin binaries?
Until he divests of it, which he did. He divested.
So you think that okay? So, wow. So you think that is Adam back promoting a security if he promotes the Bitcoin binaries?
It's not what I think. We're just exploring this from all sorts of
and Bruce, again, like I tried to explain earlier, I'm pretty sure that Charlie himself and everybody else that mined Litecoin on the first day had a significantly smaller expectation of making a profit than you yourself and all the other people that started mining RavenCoin on the first day. And that is going to make a big difference in deciding how RavenCoin may or may not be regulated in the future.
Well, I think it comes back to the structure again. And like I said, out of the 1,600 coins out there, I think this would be at the very, 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 very bottom of a list of concern. I mean,
here's the thing, right?
Accepted or anything else.
Right. We completely agree with you that the RavenCoin itself was probably one of the most honest launches of a coin, in the last couple of years. Okay. We're not debating that, right? But the reason why RavenCoin is being talked about on this show and is so popular is basically you countered that, right? So you countered the fact that it was the most honestly launched coin with a coin that was promoted by very, very prominent people.
Well, wait a minute. Promotion actually makes it more fair because more people had a participation in the network. And that's why the large holders own so little. I mean, I don't own 10% or some crazy thing. The promotion helped it be more fair.
Substantial. But basically, because you were not profiting from selling an ICO, you launched it fairly, but you still were looking for an equal amount of profit at the end of the decade, at the end of a year, at the end of 2 years.
I tell you what, let's do this. Sasha, you and I have been talking about wanting to moot something, to do a moot court on something. I think the RavenCoin launch, I think, is a perfect subject matter for that moot court. What do you think?
I agree.
Well, who's going to be the judge and the jury?
Oh, no. We'll let Tone.
Tone, you can be one of the judges. We could have 3.
No, Tone doesn't get to be
a judge. My mind's already made up.
Exactly. Tone doesn't get to be a judge. And just so you know, I think we could probably get a pretty good participation in it. Let me call around and see if I can find some retired judges that I still know.
I am putting on a conference. In January.
Oh, here comes Tone. He's going to pump his conference.
I'm going to pimp the conference. We will have workshops like the day before the conference, and we can certainly do a room half a day. You guys can argue the case, and if you can, get a judge for this, would be awesome. If we can live stream this or record it. If you can get a retired judge that wants to participate, we can somehow pick a jury from the attendees, like a random jury selection. This could be a lot of fun.
I'm sure we can find a retired judge who's willing to be flown out to Vegas to have
I think what you guys are defining as fun needs to be re-examined.
Hey, I've got to run.
What if it has bad consequences that in the end, it becomes that we decide that that's a security, then we could be setting, I know our precedent wouldn't really matter, but it could set a bad precedent for the whole.
Well, it's going to be Vegas. So like whatever we come up with, like stays there, right? So
Yeah. Good point.
I've got to run, but thanks for having me on.
Yeah.
Thanks,
thank
Bruce.
you.
Thank you.
Take
Be
care.
well, Bruce. Yep.
That was really great.
Wow.
I really enjoyed that discussion, and I hope now people understand why I end up so cautious and critical of all of these altcoins, because to be honest, I don't want to be in Bruce's position right now. Like, he may not have any issues with the lawmakers, but I personally do not want to take that risk.
Well, there's just so much, once you start adding by themselves, prima facie, it sounds like, oh, okay, T0 like invested in this, donated money to this project, or Medici, whichever one, either one. So prima facie, it sounds like, oh, that's fine, that's cool. Bruce Fenton, he's an influencer, he's involved in this project. He's allowed to be involved in projects, but once you just kind of put them together, that's when it starts to pick up the aroma of shade.
Well,
I don't want to say shade. It just
yeah,
what's going on here kind of vibe,
So the thing that we used to talk about quite a bit when I was doing more trial work is how circumstantial evidence is sufficient in order to create an entire picture, right? When you don't have an exact smoking gun of something, when you don't have all of the pieces of evidence, you can take small pieces and portions together, and you can present those to a jury and ask them to decide what's reasonable and what's not, right? And so if I was to be a prosecutor on this case, I would say, all right, let's go to the map. They wrote the paper after they launched the network. They spent 4 months pumping it. The major holders all stand to benefit from the end result of this network being launched, and they all hold massive amounts of the coin. In fact, they even list the RavenCoin rich list. There's a Reddit board for that, and they're all within the top 10 holders. So you present that to a jury, somebody who's not within the cryptocurrency community, or somebody who's not a holder of RavenCoin and has an inside interest. And I think it would be fair to say that it's more than a coin flip on from the prosecution side. It's better odds of a coin flip to find that there's some form of at least a de facto partnership where they came up with a way to try to get people to create this coin that they are going to net benefit from before. Whether that equals an investment contract or not, I really need to spend a little bit more time digging through each element, finding supporting case law for that. But I said when I was down in Panama that I'd come up with a few ways that today it could be interpreted that Bitcoin today, based on management control, lack of decentralization, that there's more centralized control by one certain form of group based on the mining distribution, that it could be argued that Bitcoin has crossed from not security into a security, and that I wanted to do a moot court case on that. But when looking at how things transform over time,
when I did moot court, we had to argue both sides. Will you do that? We'll
absolutely.
Okay, that'll be interesting.
I think it's almost imperative. I don't know how we're gonna do this, but maybe to get most of the part, everybody on the jury not be a crypto person, just random people from Vegas, hey guys, come hang out with us, come check this out. Do you know anything about crypto? Do you have any? No. Great, perfect. Come do this. I think that would be really important because most people don't know about cryptocurrencies.
I think this has been a fascinating discussion for us and great legal analysis. I mean, Jason laid out some great arguments and has been. I guess what we're really trying, from my perspective, we're just trying to add a lot of color and come up with, compelling arguments on both sides. And I think, to Tone's point, right, is when you're in that situation, not sure exactly what side this could come out on. When you're explaining, sometimes you're losing. So, you know, it's a tricky situation. And with the lack of regulatory guidance, you know, clearly, you know, add to the ambiguity. My point throughout, you know, and to reiterate is that, you know, this is a very unique set of facts and circumstances, and really kind of creating its own lane. But unfortunately, you know, as we know, you know, with the courts and with the regulatory community, I mean, they're going to try to push this potentially in a lane that exists instead of creating another lane. I don't know, you know, I'm not sure of when that will happen, when you will see, you know, opportunities for, you know, real advancements to be moved forward. Unfortunately, you know, depending on how things, you know, fleshed out, you know, this could go either way. But you know, unless and until we see more action from the regulators, you know, we'll keep talking about this.
Sorry, guys, I was on mute. All right, so that was a great discussion. Spent about 2 hours on that. But I just want to take a few minutes. I know some of you have to go. I have to go. But I just, we did have some news. Even though this isn't like the latest news, but the latest one came out. I think they started these investigations earlier. But the NASSA, which stands for the North American Securities Administrators Association, which I did not even know existed. So they launched something called CryptoSweep, Operation CryptoSweep, where they are investigating 200 ICO projects. And if you click on it and look at the names of all of these projects, I think there was only one here. I think I've heard of DAS coin before. Don't really remember what it is, but the only coin on this entire list that I am familiar with is ShipChain. The only reason why I am familiar with ShipChain is because there was a little incident down in Miami where I heard a man named Kevin Harrington, formerly of Shark Tank and the creator of As Seen on TV. I guess he owns the trademark when he started those As Seen on TV commercials and the whole infomercial stuff. And he was talking about blockchain, and he didn't know what he was talking about at all. And one of the companies he was promoting on stage was ShipChain. And then about a month later, ShipChain was in the news that there was a cease and desist order. Now, ShipChain, I believe, is trying to fight it. And it says right here, order withdrawn. So I'm not sure exactly what that means. I haven't heard of any of these companies. So again, I've heard of all of these exchanges. I'm not exactly sure what relevance this is, but I'm still waiting for somebody to go after an ICO where the people are, you know, where we know who they are. I want to see a real case to let us know what the hell is this ICO stuff as far as a regulatory perspective goes. So your thoughts on the NASSA 200 company Operation CryptoSweep? Anybody can jump in, go.
So first of all, for those that don't know what what NASSA is, the North American Securities Administrators Association, you have to remember that there are 50 states that exercise securities regulatory authority within their states, called Blue Sky Law. And Blue Sky Law was around long before the SEC even existed. And what you would have is you'd have state regulators and enforcement offices that wanted to do coordinated efforts for scams or securities offerings that crossed borders. And so if one state had information on one type of scam and they found out that potentially there was a buyer or a seller in another state, you would get those states working together, and they would do that either individually, desk to desk, or they would do coordinated efforts and information through NASAA. Now, a few months ago, I contacted the office I used to work for in Oregon, and I mentioned that, you know, I was putting together some educational material on how to train lawyers and how to be a little bit more educated on blockchain technology, on Bitcoin, how it works, why it works, what types of scams can be committed, et cetera. And they said, yeah, no thanks, Jason. We actually have an entire packet from NASAA that we're using as our educational material. So there's been a ramped up effort by NASA and the states are relying on that information and coordination from NASA in order to go after these things. And I think part of that makes sense because the resources that NASA can bring and the nature of the cryptocurrency offerings are not limited like they used to be in the old boiler room type setups, where you had your accredited investor list and you would get cold calling and things like that. Today, everything just transitions across borders very quickly with your ICO, click here and make your purchase type scam. So I'm not surprised that NASA is involved. I'm actually surprised that it took them so long to get involved. I think David remembers me saying on stage a few times, don't forget about the states. One thing to remember is that even though you may be dealing with one state or one state comes after you, different states have different laws. So where you may not have violated a law in one state, you may have violated merit review standards in another. And the difference between disclosure rules versus merit review rules are pretty big. For example, Texas has merit review, Oregon has merit review, California has merit review. All of what merit review means is that they take a second look of not just if something has been disclosed, but whether or not the offering itself is fair, just, and equitable. And so they put kind of a, I don't want to use the word paternalistic, but what they put is an initial an initial review of whether or not that offering should ever even be in the state based on the nature of it, who's doing it, if they have any experience in doing it or not. So there's this extra level of protection beyond just, like a federal SEC disclosure rule. So it's very complex trying to balance and go through the various state regulatory, not only their laws, but their regulations as well. If you're the subject of one of these state actions in the CryptoSweep, generally speaking, I found the states to be incredibly reasonable. And they're willing to work with somebody very quickly to find resolution if you're wanting to find resolution. I know when I worked in the office in Oregon, before we ever issued a single subpoena or request for information, we'd done hundreds of hours of research because the office was dedicated to that. Unlike the SEC, that can receive an initial complaint and then 30 minutes later send out a request for information, and then they're basically fishing for information. So chances are, if you're on this list or you end up on this list or you get a letter, they're already a couple hundred hours of research and work ahead of you before you even respond to the letter. So it's the state regulators are really no joke. Yeah, they're no joke. Keep in mind, as with the federal level, with the state level, you're battling an administrative, civil, and criminal case all from the first time, because that agency will work side by side with not only its own regulatory agency for administrative decisions, but it'll also share right from the beginning parallel with a district attorney and may bring civil actions or support civil attorneys in their civil actions by maybe some sharing agreement for evidence and information on the side. So,
well, I never heard of the sharing agreement, but Jason has a great point. So to date, I mean, in the history of all this crypto stuff, and I put crypto stuff in quotes, the states actually are the ones who stopped the biggest crypto scam to date when Texas and North Carolina issued cease and desist orders to BitConnect. That wasn't stopped by the federal government. It was stopped by Texas and North Carolina. Texas did the first shout, and then North Carolina put the nail in the coffin with the second cease and desist letter. I want to say we filed the lawsuit maybe a couple of days later for the class action that's now been certified with lead plaintiffs. The Google has moved to dismiss the complaint, but we're going to see how that goes. But the states are the ones so far who have actively gone after the larger crypto scams. So while we're all waiting for the federal government to do something, it's a good thing that the states are involved in doing these cease and desists. And I think it's good that Tone can say he hasn't actually heard any of these. I'm surprised you haven't heard of PlexCoin. I would assume you've heard of PlexCoin, Tone.
It sounds vaguely familiar.
they got some notoriety when they got hit with the cease and desist. But I'm like you. I haven't heard of any of these.
I think the BC Holdings is your BitConnect if you scroll up.
BC.
Oh, this one here.
Yeah. So, I haven't actually sued any of these. So, again, these are all
unless this is BitConnect.
The emergency does not look to be BitConnect. Nope.
No.
I don't think that's the BC Holdings one.
No.
Oh, I thought it was.
That is BC Holdings.
Is it?
But it doesn't really matter. I'm giving credit,
My mistake.
Jason and I, when we first started talking crypto in probably 2000.
Speaking of BitConnect, want to give us a quick update on this one? And I gotta say, Bitcoin Journal. Diana Engo, we used to write together in Cointelegraph about 4 years ago. I'm assuming Ian DiMartino is still with Coin Journal. Crypto Scam. That's my podcast. I own the domain. I want royalty rights.
Look, they're slowly but surely. India is taking a lead. They arrested the head of the. We have to scroll down the article. I think this guy was running the Asia department of BitConnect. It's. The police, they know where some of the money is. And let's not mistake what this is about. This is like anything else. This is going after Capone. They want their taxes. They don't want these guys who do these exit scams to walk away without paying taxes. So that's really, the governments aren't in this to go after these, guys who do the exit scams to go for the victims. They're in it for themselves, which is why all these guys are going to get prosecuted and the governments are going to find them. They walked off with $1 billion. The government wants their cut. Excuse me. Got off a plane with a guy coughing next to me for 6 hours this morning from San Francisco. So I do believe they're going to slowly but surely find these guys and get some of the money back. How that helps.
Wait, David, you're not required to order 2 seats on an airplane?
So now you're going to give me a sidetrack. You're not going to give me a sidetrack. So I was sitting on the aisle. The guy sitting in the middle was a bigger guy than me, and the guy on the left, at like 3 hours into the red eye, looks at the guy in the middle and goes, "Buddy, you keep touching me. You keep falling asleep on me. Do you want the window seat?" And the guy in the middle was like, "I'm sorry." And everyone's just like he woke up like 2-3 rows of people at like I guess 3-4 a.m. It was one of my more exciting flights.
And not first class, man. Damn, I thought suing people was a good business.
I was number 36 on the upgrade list of 40 or 50 people, and I'm platinum for crying out loud.
David might not be as wealthy as Bruce Fenton is. And
clearly,
no way.
Guys, listen. Also, check it. Something really just came to me. All right, I need to stop hanging out with you assholes because we need to get nicer to Bruce. Because maybe one day we could get off the +1 for Satoshi Roundtable.
Listen, I will never be invited to Satoshi Roundtable.
Well, I'm invited. I'm deciding if I want to pay the $5,000 to go. It's a kind of a lot of.
You are not invited if you have to pay $5,000.
Well, no,
you've been invited to pay $5,000.
No.
It's invitation only, but you have to pay your own way. The hotel's not cheap.
It's a donation.
Yeah.
Okay.
Like everybody, that's the thing, right? Like I remember
Coin. Hi. Right.
No, like you don't want to be invited to that thing because when you're invited, now you feel like, you're privileged. You got an invite from Bruce Fenton, you have to go. And then you look at how much you have to pay and you're like, shit, why would I want to get invited to this thing?
What does that go to? Like, what does it go to?
It's like at the most expensive hotel in all of Mexico or something.
Yeah, but it's also, forget about that. You know, it's like the pay to play guys. You're paying to play. If you need to
Right.
pay to be with your friends, that's not, you know, anything special.
And I remember all of the conspiracy theories when the first Satoshi Roundtable happened, and then the second. And well, how come I'm not invited? Because I'm not. Well, nobody's right. And you're like, you're not going to afford it anyway. Well, like, why? It's not a conspiracy theory. It's just, you know, it's an invite-only event, and it's not cheap.
So
Here was at Polycon. Oh, sorry, Jason.
I was going to bring it back on topic for the NASA conversation, but it's fine.
I think the Bruce conversation was too serious for the show. We needed to like get back to our normal. Let's make fun of somebody. Apparently today, Dave is looking a little.
Actually, if you look in the troll box, David, some people were commenting on how you know you've lost weight, but apparently somebody saw you pick your nose and eat it at the same time. So now you're David.
Oh God.
Yeah.
I'm okay with that.
Back
if you have kids picking your nose, it's just part of life.
It is. So I wanted to go through the list. This is the list of merit review states. So there's two different types of states. There's the states that follow the NASA guidelines, and there's the states that that don't, that they have their own guidelines. So the NASA guidelines merit review states are Arizona, California, Iowa, Kansas, Massachusetts, Michigan, Minnesota, Missouri, Nebraska, North Carolina, Ohio, Oregon, Pennsylvania, South Dakota, Tennessee, Texas, and Washington. Now, there are 5 states that do merit review, but they have their own version of merit review. That's Alabama, Maine, New Hampshire, Oklahoma, and Virginia. The rest of the states out there do basically what's called disclosure review. You just have to disclose it. So long as you do that, fine. Now, for example, New Jersey will do a merit review for a Reg A offering. New Mexico does the same thing. Sometimes if you have a higher level offering, the states will impose a little bit more of a review on whether or not it can be registered there. Some states like Oregon, even though you file a Reg D offering with the SEC and you give your notice filing, sometimes they may ask for more information. It's just, you know, there's 50 states out there that also regulate securities, and they're allowed to, and the courts have agreed that so long as they don't frustrate the purpose of the federal securities laws, they're able to regulate securities in their states all they want. And this has been a long time coming. And so again, I tweeted the other day, if you don't know what a merit review state is, you might want to look into it. So.
You've talked about this for a long time, Jason.
Yes, he has.
This is not a new thing from you, for sure. You've been talking about it for years.
Well, by the way, now that you guys made me look at the box, I didn't realize that, you know, as I believe the representative Jew on this panel, I didn't realize Jews were the ones responsible for all of the regulation in Bitcoin, that we control the world. I mean, the anti-Semitism from this one guy who, you know, thinks that apparently me and my people were doing all of this.
Adela warned me the other day not to read the comments in the comment box. And I made the mistake today. I loaded it up and I've been watching, and there are some amazing people in the world.
Oh yeah, no, my troll box is second to none. I can tell you that much right now. All right, guys. Hey, we're almost on 3
I'm really
hours.
sorry, but I have a call at 3, so I gotta take off. But
say goodbye to Sasha. Thank you, Sasha.
thanks, and have a good long weekend, everyone. Bye.
Thanks. It's up to you guys. We can briefly cover CBOE wanting to launch the Ethereum futures, but I'll just comment quickly. Maybe we can do a deeper dive next time.
Guys, I have to go.
You have to go as well. All right.
Yeah, I have people sending me like weird comments. Going
Adela
like,
does have people. She has people. I can attest
no,
to
people
that.
are commenting. They're going like, so I guess
She has a driver. She has a maid.
Right.
She has people that, you know.
Okay,
she has people.
so it's Bruce, Adela, David.
Oh God! No.
Just want to make sure I understand the pecking order.
I'm pretty poor, but I do have to send a shout out to my mom who's watching,
And hey, Mom. And, you
Hi,
know,
Mom.
I'm famous because I'm on Tone's show. So there you have it.
Okay,
I
I'm gonna go,
enjoyed,
guys. Have a good week. We'll see you guys next week.
Yeah, and you guys, thanks for screwing up Satoshi Roundtable for me, just so you know.
You'll be invited. We can get you invited. I shouldn't say anything. I finally got invited for the first time this year.
I would love to know where it is and convince Junsa to go with me, and we'll sit outside with sombreros and mustaches.
It's not a. I'm pretty sure it's not a secret where it is. You can just Google it.
That's never
Jason.
happened before.
I know.
Junsep came out for the CNBC special Monday night.
Oh, that's great.
He did, but he was hanging out with my parents.
Yeah. Cool.
Oh God.
Dude. No, David is a real celebrity. That's a real celebrity here.
As my wife says, she would trade 30 pounds for 30 pounds in the fame for some money. Bye, guys. I'll see you next week.
All right,
Bye,
guys,
David.
take care.
I'm gonna
Bye,
check
David.
out too,
Yeah.
Tone.
We're gonna wrap this up. We'll talk about the Ethereum futures next time. I think it's a good time to end it. All right, guys.
Bye, everyone.
See ya.
Bye, everyone.
Great
Bye.
long weekend. See ya.
We're gonna let everybody go. Thank you so much for watching. I thought this was an amazingly educational episode as we dissected one of the most honestly created proof of work coins and why it is still, in a murky gray zone of the regulatory SEC security structure. Now, keep in mind, Bitcoin doesn't face that criticism because I see people in the live chat are still saying that if RavenCoin is a security, then Bitcoin is a security. That is completely incorrect, okay? There are huge differences between them. Please rewatch this episode to understand exactly why that is. I will see you all on the next one. Keep an eye out for another episode of Crypto Scam. It's finally been recorded. It's another Ethereum crypto scam. And I just got to find time to do some editing, and I will release that video shortly. And as usual, check out our morning shows. And thank you very much for watching. I will see you all on the next one.